Thank you for joining us. Today, we're excited to bring you a brand new show from the Onramp Media umbrella. Wake Up Call is a weekly show that will be streamed live on LinkedIn every Monday morning. To catch the premiere of each episode, follow Onramp's LinkedIn page and add Wake Up Call events to your calendar. After the live premiere on LinkedIn, we will distribute each episode across Onramp Media's podcast channels and YouTube page. Wake Up Call aims to educate financial professionals on the merits of the Bitcoin investment thesis, how this asset represents both a threat to legacy financial service businesses and an opportunity to differentiate oneself and retain and attract new clients. Hosted by Mark Connors, Onramp's head of global macro strategy, and Rich Kerr, Onramp's president of managed wealth, this show seeks to provide financial professionals the wake-up call they need, prompt them to have an open mind with respect to Bitcoin, rethink their prior assumptions, become more educated on the topic, and learn from others who are already farther down this path. Mark and Rich bring a combined 60-plus years of experience across traditional markets and financial services, and will share their unique perspectives in how their peers and colleagues can approach the realm of Bitcoin. Wake Up Call will feature guests from various backgrounds and industries who will also share their own journeys to Bitcoin and how others can get up to speed. Now, time for the show.
All right. Well, welcome and happy Monday to everybody in the audience. Mark, happy Monday to you.
Thank you,
How
Rich.
are you doing?
Good, man.
Good. And Wyatt, welcome. Glad to have you on the show. So welcome to Wake Up Call. We have a very special guest today, Wyatt O'Rourke, who is the founder of Basilic Financial, which is a registered investment, investment advisory out of Denver, Colorado. So welcome, Wyatt. Quick few words to say hello to the audience.
Yeah, thank you guys so much for having me. Honored to join.
Excuse me. So, Mark, real quickly, you always are parsing through the news. What are you seeing today, last week, and into through the weekend, I guess? Because there's a few things that caught my eye, but I'm curious about your observations.
Yeah, I guess the news from both the online economists and the broader tape is about the uninversion of the yield curve. I think it's the second longest period of where the twos were above the tens, which indicates recession, indicates that there's a recession coming as the Fed reverses policy. What does it mean? It means that, say from March 2022, when the Fed started to hike rates and push the front end of the curve higher than the long end, that usually is negative for banks. It's not a wonderful period to lend. In the glory days of banking in the sleepy 70s and 80s, they used to call it 363, Rich and Wyatt. It was, let's wake up and borrow at 3. Let's lend at 6 by lunch and be on the golf tee by 3 p.m. It was a very easy business. But, over time, things get complex. Markets get efficient. They take risk. They go into securitization of mortgages. They do derivatives. And then they blow up like they did in March of 2023 when they decided to go all in on interest rates. And the reason I bring that up is because I don't think this inversion of the curve, uninversion, matters right now for two reasons. Recessions in the past have always handled or happened around an event. 81 was a banking crisis. Sort of 91 was on the back of financialization. You had Black Monday, you had tremors in the financial markets, and then the Persian Gulf War blew everything open, and then we went into a recession. And we know what happened in 01 with the dot-com bubble and, the over-leveraged Enron and all those guys. So each recession had it. In 08, obviously, we know what happened. But you know what? If you look at the recessions, and I'm going to focus on this because I think this is going to bring us about what's in the system and what Bitcoin's out of the system. And I think, Wyatt, we definitely want to talk about how you were not an IRA. You were a Bitcoiner that brought IRA to Bitcoin, which is just, I'm going to put that up here in our ramp.
We'll have a little fun with that in a bit, but yeah.
So if someone goes to the St. Louis Fed website and looks up GDP, they'll usually show you GDP over time with the recession bars. When did we have a recession? 1958, 1961, et cetera, et cetera. If you look at it, you'll see that before 2000, there were recessions every 6 to 8 years. But since 2000, they've been longer. They've been, I'll even say since basically like the 83 recession, they've been longer paced on average. And I think it's because of a more interventionist Federal Reserve and Treasury.
Yeah.
And there's a price to pay for that, like the old thing of Dickens, spare the rod, spoil the child. I know that's not popular today, but, if you don't go through recession, if you don't have a credit default cycle, things get distorted and you have debasement. So back to what I'm talking about with the uninverted curve. And it's not going to matter because we're going to be printing money. We're not going to go through the pain of having an industry default, because as we saw with the bank defaults in March of 23, man, no stomach. FDIC backed everything. More money went in, $400 billion in a matter of like 6 or 7 days. So it's important to watch. There'll be short-term rotations because of changes in interest rates, and we definitely think that rates drive volatility, no doubt. But they aren't realized in the kind of fallouts we've had in other recessions. So those are my 2 sats, Rich, on the major focus and why maybe it should be pushed off.
It's funny that you mention the length of the recessions and your observation about interventionalism, in what people are doing to, try to tinker and manage and guide these naturally occurring, events, I guess. And I think those who have kind of caught several of our pods along the way, this is really illustrated quite well in the Bitcoin Standard. I think it was one of the big epiphanies when I read that book, where he was talking about the interventional nature of the Federal Reserve and, whether you're a monetarist or a Keynesian, and how you came about what you were doing in that space. And he demonstrated very clearly that for years in advance, as well as through the recession or depression, that, there was unnecessary tinkering that caused, even more problematic issues down the road. But that being said, well worth the read. A couple things that caught my eye over the weekend, Mark and Wyatt. So one, Bernstein made a call, I believe, over the weekend, and they were talking about Bitcoin price movement and where it may be by the end of the year. And that might be of interest to our audience. But one of the things that struck me was, in the event of a Trump victory, Bernstein, and I believe it was 90,000 by year end. And in the event of a Harris victory, that they saw the volatility to the downside with a 30 to 40,000 price range. Any thoughts or reactions to the election cycle and how that may play out for Bitcoin in particular?
Wyatt, you want to take that one?
Yeah, no, it's interesting, Rich. I think as you Bitcoiners and as a patriot myself, we tend to get a little U.S. centric, especially with price predictions of Bitcoin. So I'm kind of the belief that Pierre Rochard has really popularized everything's good for Bitcoin, and I'm also of the belief where it's like TikTok next block. It's like Bitcoin doesn't care, and I do think those are sexy headlines for various investment shops to grab, but. I do think, regardless of what happens in November, we will, continue to see ongoing, Bitcoin appreciation. And, there's also, I think we try to conflate, too many, macro events. There's also, some free speech stuff going on in Brazil. So we see other large markets in the world actually gravitate towards Bitcoin as their political climate changes, as opposed to, getting too focused on our political climate, in a very economically powerful country, but ultimately, a fairly small country population-wise compared to some other large countries.
Yeah, that's a great point, Wyatt. I think, it's all too often that we start looking at things. We're very myopic, and we tend to look at the world being the U.S. But there's things that are
Rich, do
happening
you
all
remember?
over the place.
I'm going to pull on that. Rich, do you guys
Yeah.
remember this old New Yorker? We'll put it in the chat and post it. There's a famous New Yorker cover of the magazine where it had the New Yorker's view of the world, and it went through like a window. Ninth Avenue, I think Ninth and 10th Avenue were 50% of the picture. Then you had Arizona, California, and it was like China and Russia, like little bits. But it's just so true. And Wyatt, you said it. We're what, 25% of the economy, 40% of the global equity, but 6% of population. It's hard not to be US focused, but you definitely do. I think we're losing a little bit when we don't look at things and regime shifts or dynamics like Brazil that you mentioned, among others. So sorry, Rich, I just want to
No,
pull
no,
it up about
yeah,
myopia.
yeah, it's just it's a thing, right? We tend to look at the things that are closest to us. We have a clearer point of view on it, and we're
Yeah.
not well researched around what's happening around the globe. And the reality is, many of the push and pulls that we're feeling here in the United States are happening in every single country. We just have to go look. And that's one of the real value propositions in my mind around Bitcoin is, we're sitting here talking about, what Bernstein said, what Bitcoin's gonna do in 3 to 4 months. Well, who really cares? The reality around Bitcoin is that we need to be able to have low time preference. And Wyatt, you talk about that really well in one of your articles that you have published on your website, which, by the way, is basilic.io. If you want to go read some of the articles or thought pieces that Wyatt has produced, they're really quite good. And that being said, I'll step back and just say we got to get to that low time preference mentality. We quit thinking about instant gratification and what this means to this necessarily, but take a bigger long-term view and step back and understand what Bitcoin has done over a 15-year cycle. And the Kager conversation we've had multiple times, but I encourage anybody in this audience to look at any 5-year cycle on Bitcoin. Pick it, and you'll find that the Kager is north of 25, which is pretty powerful. So you could take the worst situations and realize, oh, well, it's really not that bad, so long as that we moderate our time preference. That being said, that was one of the things that caught my eye. Of course, this morning, Michael Saylor, who's the CEO of MicroStrategy, was on CNBC and talking with Joe Kernan and the likes, and he came out and dropped a $13 million price target. He loves to just shake them. Now that's a 21-year time preference, so it was quite an interesting thing. But it was fun to watch Saylor go in and talk a little bit about how his business has evolved, from a software company, which, is still, as he says, a cash cow. But at the same point in time, he's now a Bitcoin company as well. And he's focused in on the monetization, or the securitization, I guess I should say, around Bitcoin, with the way that he is doing convertible debt offerings and things on that nature, as well as issuance of stock, and creating leverage points for Bitcoin and people to access it. So it's a really good clip. I encourage everybody to go take a look at it. But those are some of the big things that caught my eye over the weekend, Mark.
You know what you just did, Rich, right there is you gave a great segue for Wyatt, because I think we have with us today the sailor of RIAs. Saylor saw the opportunity to transform his business, and you did the opposite. You went inverted and you said, let me take a new business and give it the opportunity.
Yeah.
Well, Mark, that's far too kind. That's a title I can, not
You
not
can run with
uphold.
it.
Yeah, right. Thank you. As long as somebody else said it. Um, yeah, but I appreciate it, and yeah. So I really identify as an entrepreneur. My background's in finance. I always joke, I'm traditionally trained in finance, and a lot of good that does me. Um, but my last startup went under. I was transitioning. Try to figure out what to do next, and just being an entrepreneur, I didn't, and a little stubborn. I didn't want to go work for somebody else. I'm a really avid TFPC listener, and Marty had a line, where it's like, well, like the biggest thing you could do, the biggest chunk of the pie to help grow, is help grow Bitcoin adoption. And so it's like, got the wheels turning, and I'd already been helping friends and family with some budgeting, financial planning, investment sort of stuff. And so ultimately, I decided, considering I can't code or anything, like what I could do is help grow Bitcoin adoption. And at this point, I was already a maxi. I'm as you mentioned, Rich, in Denver, Colorado. I'm really involved with the Bitcoin community here. I'm on a board member of the Space, which is Denver's very own Citadel, very similar to Bitcoin Park or Commons, and we're getting that up and running, which has been extremely rewarding and exciting project. But I just view other maxis as my peer group, and I just can't look myself in the mirror and go to bed at night if I wasn't upholding some of these Bitcoin values and ethos that we hold so true to our hearts and our culture. So deciding that, I figured it would probably be best if I just went straight independent. So got fully licensed and registered, and built a firm aimed at bridging the gap between traditional financial services and Bitcoin financial services. And we go about things slightly differently. We try to be very tech enabled, streamlined, all that good stuff. But we also take a human first approach to our business, and we work with our clients to make sure we're finding funding contentment, where money and meaning are in balance. And I think Bitcoiners as a whole get a little caught up with number goes up, which is great, but there's ultimately much more to creating wealth and passing on wealth. And so Bitcoin is obviously a huge tool we use and advocate for. Many of it is quality principles, but we offer four services. So we have our Bitcoin financial services, and when we focus on sound custody solutions there. So not a fan of the ETFs. As great of a company as MicroStrategy is, we don't want to buy MicroStrategy as a proxy to Bitcoin. Bitcoin has the properties, ate with it to hold the bare asset, itself. So we try to facilitate that, and we have, three different tiers of custody depending on how comfortable clients are with the asset and the technology. Then, we have retirement services, which are like 401k plans, cash balance, financial planning, portfolio management, and in each of those traditional financial services, offerings we have, we try to look at those through, the lens of Bitcoin. So if you're interested in setting up an IRA, can we open up, a Bitcoin IRA? In the realms of financial planning, it's like, well, do you have Bitcoin? Let's, forecast, let's do some modeling. Let's see how, adding Bitcoin to your personal balance sheet can, expand your wealth, how you can plan for future opportunities for you and your family, how, it really unlocks potential goals you may set for yourself, and live a purposeful life. And then in the context of portfolio management, we'll get into some of this as well, but and the financialization of Bitcoin, which I say a little tongue in cheek, but there are new products coming out. Build Asset Management has a collateralized loan private credit fund where they buy Bitcoin denominated loans, and so getting access to that as a accredited investor, how that can subsidize some of your traditional fixed income requirements. And so really, taking a step back and looking at what traditional RIA services offer, and then, just trying to, sprinkle in a little Bitcoin along the way.
And Wyatt, it sounds like core to that, your offerings and the ability to unlock Bitcoin is to have Bitcoin, not the wrapped animal like the ETF.
That's correct.
Is that what you would suggest to your clients on those four principles?
Absolutely. I think that is, very important for us as, sovereign individuals. And, we were kind of talking about how, there's kind of this idea or that political whims can, affect Bitcoin. And while, that might be true to like the price action over, whatever window you want to look over, the fact of the matter is, us as individuals can, take custody of the asset. And, we think that's extremely important, whether, X regime wants to censor, whether, Y regime wants to, take your gold and maybe ultimately like your Bitcoin. Like, it's important to us that we try to mitigate the exposure to trusted third parties, and we take on the responsibility of our wealth ourselves. And at Basilic, we just try to be a partner, a coach, a sounding board to make sure our clients are comfortable with that.
At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession, and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information, check us out at onrampbitcoin.com.
Yeah. I love what I'm hearing, Wyatt, about your story. One, you slightly changed the language of the RIA just a moment ago. RIAs, generally speaking, have always talked about financial independence. We're trying to help you become financially independent, right? And you take it just a little bit further with sovereign individual, right? We want you to feel fully empowered to make the decisions that you wish to make, to live the life that you wish to live, and to have your assets simply working as a tool to empower you to do what it is that you were meant to do on this earth. And so I love the extra layer that you just kind of brought forward. One of the things that strikes me, you and I've had several conversations, and one of the things that strikes me is you have this real altruistic spirit, right? You're not only trying to help empower those people that you are working with that are clients or prospective clients or in your community, find their path to Bitcoin, but you're also giving back to the community itself, right? And so one of the things that you recently did, as I understand, is you just completed or authored a chapter for the Brains Bitcoin book. And it was largely built around, the financialization or the collateralization of Bitcoin. And I'm curious if you can shed a little light with our viewers on one, what was the general thesis that you came forward with, and as it relates to collateralization, and why is that potentially an important aspect for Bitcoin on a move forward basis?
Absolutely, Mark. I met up with the brain, or excuse me, Rich. Sorry. Met up with the Brains guys in Nashville, and stumbled upon this opportunity, which I was super fortunate to have. I love writing and talking about Bitcoin, as many of us do, and they're a mining company, and wanted to put a finance book out there, so I threw my name in the hat. And ultimately, I was tasked with focusing on why Bitcoin is good collateral for different companies of various sizes. So break down simply into big, medium, and small companies, right? And so it's a tremendous book, and different chapters get into why Bitcoin is pristine capital, why it's permanent capital, and some of these terms that we've come to embrace as Bitcoiners, which is just a succinct way to describe it as a savings technology. Well, if you own a savings technology, you're freed up, like with your decision making, right? You can zoom out, and we talked about earlier, you can focus on the long term, and that low time preference kind of mentality innate with Bitcoin, and focus on investing your capital in projects that will have a substantial return, especially if you're trying to just beat the price of Bitcoin appreciation. It's very hard to invest for the short term. A lot of public companies get caught up, trying to just juice the numbers for the next quarter. So, they can get that bonus, they can get that stock price appreciation, and Bitcoin kind of flips that narrative. So ultimately, it suggests that, individuals and companies, acquire Bitcoin for their balance sheet, but, also understanding you still have, expenses, and you need to, invest for the future growth of yourself or your company. So we take a look in this chapter about, keeping that Bitcoin on your balance sheet and using it as collateral to gain access to liquidity. And so there's really two main ways you can get access to liquidity. It's either via loans or bonds. And in doing so, for either, you need to find a liquidity source. And so in the chapter, we kind of focus on three. There's your TradFi players. Those are your traditional financial institutions, your big banks, various pools of private capital. Then there's kind of a newer market entrant. We call these, kind of a CFI or centralized finance, just for sake of kind of distinguishing the two. And these are still relative startups themselves, just given the kind of the nascency of Bitcoin. And these would be companies like your Unchains, your HODLs, and these are companies built with for Bitcoin, so they embody Bitcoin ethos, which means they're built with multi-signature technology at the basis of their offering. They don't rehypothesize your Bitcoin. You get the wallet address so you can monitor the balance. And this was I think these companies saw a market opportunity and saw how they could compete against the TradFi players who will put an 800-page contract in front of you, and you got to hire a lawyer just to understand what's going on, and they're generally risk adverse and don't have kind of a fluent understanding of the asset or the technology. And so we have this new emergent competitor base designed to specifically offer liquidity for Bitcoin. And so I think that's really exciting. And then kind of the newest market entries is kind of like your DeFi protocols. And I know that is a little bit of a dirty term in the Bitcoin industry, but we are starting to see now companies and projects being built specifically for Bitcoin on some sort of layer 2, or utilizing Bitcoin's distributed log contract functionality. And so this is kind of really taking the trustless and permissionless and aspects of Bitcoin and to that full extent. So ultimately participants have to do their own due diligence, especially with newer protocols that haven't been around for a while. You want to make sure to really do your research and understand what you're getting into. But the moral of the story is that with some of these newer protocols, you don't even necessarily need to know who the counterparty is. You have a program designed to take your Bitcoin and however it works with the specific protocol you decide to go with, get some sort of liquidity in return, which maybe some sort of stable coin, and then upon a pre-agreed upon agreement, how much you're repaying, at what point you need to repay it, you have that liquidity, and then can ultimately go to market and decide how to spend that. But your Bitcoin remains intact, and you're still owner of it as long as you stay within the bounds of your predetermined agreement.
Is there an analog, Wyatt, that your clients look to in TradFi? They say, oh, good, this looks and smells like a home loan, or this looks and smells like a HELOC, or it's more like just taking money out of the ATM. What's been the feedback?
Absolutely. I think those are some great examples, Mark. And this is where, I think Basilic is kind of innately suited to help clients with this sort of thing, because in the Bitcoin community, it's honestly fun. I do it too. We poo-poo TradFi a lot, right? And it's like, oh, they don't get it. They're the ones that got us into the mess. Whatever it may be, like they're kind of easy targets a lot. However, I think we need to understand that there's been given the capitalistic society we live in. I'm a capitalism absolutist, but there's been developments in in financialization with TradFi products. I think a mortgage loan is like a great example, and so I think if Bitcoin can get deeply integrated with traditional financial products, we really start to unlock a lot of things not currently available in the market, and that makes it more robust in the meantime. And I kind of mentioned build asset management previously, and so what they're doing is they're taking loans collateralized by Bitcoin, packaging them up in a private credit fund, and then offering that private credit fund to investors to get a yield. And this isn't like your DeFi yield, with like different altcoins. This is like TradFi yield. This type of yield has been around for hundreds of years. And so I think if we start to embrace some of these products, we ultimately end up making Bitcoin more robust. And just because and in my chapter I use the opening scene from The Big Short to kind of set the scene. And, it's like, I think a lot of us, particularly in Bitcoin, have been trained to just like, oh no, this is, bad. And, I certainly don't, support the actions of those actors. And I think, unfortunately we are in a bit of a crony capitalistic setting. And certainly, during that time, that's what was happening. But if we have this, pristine capital, I think, if we can build additional financial products, on top of that, we're ultimately allowing more participants to enter the market. We're allowing for more robust and greater price discovery. You're enabling, party A and party B to take, either side of the trade and, facilitate that. And that adds to diversification. That allows different market participants to get exposure to Bitcoin in different ways. I think it helps with risk management. I have the belief that options and future markets will, be developed for Bitcoin like they have with, other commodities. And then you also, I think that leads to price stability because you have large pools of capital, sophisticated risk managers, sophisticated finance teams that, are partaking in the ecosystem, and they are, ultimately just taking different sides of the bets. And that's what, when I say financialization is kind of a bit of a dirty word, like it does get misconstrued a lot, but that's what I'd like the audience to take away. It's like all financial or products do in a non-crony capitalistic setting with, pristine capital that doesn't have skewed incentives. It ultimately just allows you to take a side of a trade, right? And the more participants we have partaking in whatever side of the trade that may be, I think that really allows Bitcoin to flourish. And the last thing I'll say on this is one of my favorite sayings in Bitcoin is Bitcoin's a black hole. It's like, well, we can't expect it to be a black hole, but not also encapsulate financial products that have been tried and true with different commodities and currencies, and not expect them to have a place in Bitcoin.
Push on that black hole because our audience may not. Usually, a black hole is a negative statement, like I'm lost in it, and once you go in, you never come out. But is that how you're speaking about it, or another way?
I think of it as Bitcoin just being all-consuming. Given its trustless nature. I kind of mentioned TikTok next block. It's not up to you, me, or Brian on the other side of this call, whether the Bitcoin network keeps going. Like, it will keep going whether we care or not. That's I think a great context to frame the beginning of our conversation too, with whatever election may be going on. So because Bitcoin is such pristine capital, one of my favorite lines from Sailor is Bitcoin's a wall of encrypted energy. It will continue to absorb financial markets, and I think ultimately a lot of different markets as well, and continue sucking up more and more of 900 trillion market, or 900 trillion in global markets. I'm thinking of Jesse's graph that he's made commonplace, and it's like, okay, so it's like equities, very small part of that, fixed income, I think 300 trillion, housing markets. And ultimately, if we can use Bitcoin as a form of collateral to reach different sorts of assets, that's what I mean when it's a black hole. It will continue to soak in various types of assets.
You mind if I hop in? I read one of your articles this week, and I was just pulling it up, Give me a second here, but I think it really describes, and I'll take a minute just to read it to you guys. But the black hole concept, right? The density of the black hole is sucking everything towards it, right? Everything comes to it. And I was reading one of Wyatt's articles on his website, which you can go check out yourself. Once again, basilic.io. But in the article, he says Bitcoin is the standard for decentralization. Any claim to decentralization needs to be measured against Bitcoin's rigorous standards. The most decentralized network and technology is intrinsically the following: the most trustworthy, has the most freedom and human rights, has the highest probability of staying alive, the most fair, the most representative, the hardest to attack and corrupt, the hardest to change, the most accessible, and the most predictable. Therefore, the users of any other network or technology that claims to be decentralized needs to be aware that they are participating in a network that is automatically less trustworthy, free, fair, etc. While each person's preferences and trade-offs will vary, in my opinion, this being Wyatt, encouraging the participation in any network or technology that is not the decentralized standard severely compromises the user of such network and technology. And if you go back and you just give that a few minutes and read it on your own, I think this really kind of hits the point that Wyatt's really emphasizing here, which is if you have all of these attributes already created inside of a financial system, which Bitcoin is in many respects, right? It's got its own monetary policy, etc. Everything else has to compete against those attributes and is going to ultimately fall short. And so it collapses into Bitcoin. And one could say very clearly, right? You have to not just look at all of these decentralized or DeFi networks that are out there and other protocols, but you're also looking at the current system and saying, well, how does the current system hold up relative to Bitcoin? And so in many respects, right, Bitcoin, everything ultimately gravitates, and that goes back to that chart that Jesse had created. And I think people have seen Michael Saylor use it as well around total addressable market. When you have 900 trillion in assets and Bitcoin represents, 1.5 trillion or 1.25 trillion, depending on where Bitcoin is. It's pretty astonishing, I guess is the right word, to think about what the possibilities are. So thank you for that nugget, by the way. I thought it was very well written. So,
well, I would say it was also very well read there, Rich. I don't know if you do that for a living at local schools or not, but you're bringing that up and just taking away the time. The fact that Wyatt spent the time to write it. I mean, we all speak, we think we have ideas, but when someone takes the time to write something, and I can tell that you have a lot behind that, you have hours, years, of experience behind that, and you curated it into the words that Rich shared with us. And what I liked about it, coming back to the black hole idea, which I think is core to what we talked about, and it was similar to another blog I saw from April that you wrote, which I think is pretty foundational, that others should read as well, is that, all right, well, where should we go? Should we buy treasuries? Why not? Why shouldn't we buy treasuries? Well, are they centralized? Yes. Are they used to fund things that we didn't really vote on, maybe, like a program or a war? Maybe. And that is happening. Will the increase of treasuries have an impact on the ones I bought last year? Will they be able to fund my lifestyle going forward? And the answer is obviously, we've seen, is no. So the word that I'm going to throw out there as well, in case we have any physicists on the call or asset managers, they call it also the singularity. I used to hang out with a guy at Credit Suisse who was a quant, and they liked that word, which is like you said, a black hole, creating a singularity, and it's almost the gravity of its offering. It is, as you say, the pristine asset that people are drawn to it. And I'll go back. Now, Jesse, we talked about 4 times. He's one of the co-founders of our firm at Onramp. And what he did is he drew a little nugget on the upper right corner of a graphic that at the time was $500 billion, of a little thing called BTC. And it was on the same field as all these other assets. And what we're saying is that the game is afoot where the qualities of Bitcoin are going to draw that value into it. And I think that's why Saylor uses it. And that's why that graphic will probably go down as, next to the white paper, one of the best indicators of value and insight for Bitcoin adoption. So tall order compared to the white paper. But as I thought, given your comparison that Rich just wrote about decentralization, it's brilliant.
Thank you. No, I appreciate it both. And I think that's what, it's really important. I do really enjoy writing and like to get a little provocative with it. So that piece was, meant to be, a direct shot and like one at the US dollar system, insert any fiat system, but then also, any, altcoins and, Basilic, we're Bitcoin only. That's our focus. That's why, respect what you guys built on Onramp and only try to work and partner with Bitcoin only companies. But what I'm really trying to hammer home in that piece is if there is somebody or a cabal of central bankers pushing the buttons and putting pressure on the scale and shifting the scale, like, you're not in control, and that is to the benefit of no one. And what I perceive will happen as we move towards a Bitcoin standard is unprecedented amount in today's standards of predictability, right? And as business people, as business owners, as entrepreneurs, we know we're the backbone of capitalism. We try to create value, and creating value on top of Bitcoin, I think, is obviously where it's at. But if you decide to take on that journey, it's a big investment. There's a lot of risks that come associated with that. And ultimately what business owners and entrepreneurs want is predictability. They don't want to be subject to a manufactured business cycle. They don't want to be subject to a manufactured credit cycle. They want to know that what they earn and generate in value won't be debased, it won't be stolen from them, and that the effort they take to make an investment that hopefully outpace the value creation of Bitcoin, they need the certainty on the other side that they won't get rugged in the meantime.
Yeah, it's so funny, Wyatt. As most of our audience knows, both Mark and I have been in the TradFi world for close to 35 years, if not more. And one of the maddening things is the lack of predictability, right? With our Federal Reserve and policymakers and things of that nature. And people used to just make a living off of parsing the words of the Federal Reserve Chairman, just studying and reading between the lines and looking for any little hint or innuendo that would lead to what the interest rate environment may or may not look like. And, that still happens quite a bit today. And I think that there became this group that just kind of came together and coalesced and said, stop fighting the Fed, don't fight the Fed, don't fight the Fed, right? That all kind of came out in the Greenspan years back in late 90s, don't fight the Fed. And I just sat back and I thought to myself, this is maddening. Like, it's legitimately maddening that people are, one person reads something a little bit different, and all of a sudden you have this skew in terms of how they might, be advising their clients. And clients, you're talking about business owners wanting predictability, and that is so very true. They're certainly willing to take advantage of unpredictable environments, but they do want predictability in how they focus on their businesses. But the same is true for individual investors that are coming to you. They're looking for predictability. the predictability in the relationship that you offer, the predictability in the investment philosophy that you implement, the predictability, in the investments that tie into that investment philosophy. And so, the beautiful thing about Bitcoin, in my opinion, is it's got absolute transparency and predictability in terms of its monetary policy. You know what is going to happen in terms of the supply of Bitcoin. You understand um, that it steps down, right, every 4 years in terms of supply coming to market. You understand that the demand is only increasing. And I think Fred Pye, who was one of our guests a few weeks ago on the show, just said, look, if supply is going down and demand is going up, there's only one outlet for price over a long period of time, and that's to go up. And so, predictability is a really, really important concept that I don't know that we talk enough about with our audience. And so I appreciate you kind of bringing that forward. That being said, we could sit here and chop this one up quite a bit. I love the conversation. I want to thank you, Wyatt, for taking the time to join us and share your unique journey into the RIA space, being a hardcore Bitcoiner, a Bitcoin maxi, and saying, you know what, I've got to step into the market and actually fill that void and carry it with the right level of integrity and accessing the Bitcoin correctly, securing it properly, and making certain that it aligns to what the client is really trying to achieve. And I think that that's what we're all about on this call. It's trying to say, let's get in alignment. Let's do good work for our clients so that they can be financially independent and maybe even sovereign individuals should they choose that path. And so I want to thank you, Wyatt, for joining us today. Any closing thoughts, Mark or Wyatt, that you'd like to share?
Wyatt?
Thank you guys so much for having me. I absolutely love what you're doing. And I think the mission of Onramp is, extremely important as well. The more people we can get, comfortable adopting Bitcoin from an individual or institutional side, the better. I also, have a, working hypothesis that, just for what, cloud native companies were to legacy IT systems in, the early 2000s, multi-signature native companies now, will be, better off than their, TradFi or, trusted third party, counterparts. And you guys are doing a huge thing for the ecosystem and trying to push that forward with that ethos. And, I'm honored to be on the pod today. And, if you're interested in any of my work, you can find it at, basilic.io, wyatt.o'rourke.com, or I'm also very active on X at WR O'Rourke.
Oh, very cool. Well, we appreciate it. And you're right. Mark and I, being TradFi refugees, as we so proudly call ourselves, we didn't leave great careers with people that we really, enjoyed being around. There are a lot of great people inside of the TradFi world, and so we're not, bashing on it. We're trying to help others, come to the same conclusion or similar conclusion, their own conclusion around Bitcoin, one way or the other. Get off the bus, get off a zero, and that's the goal that we try to push forward. And in our minds,
why? See, you got to be in business with good people, because Rich is being kind there. He left Schwab. My firm, Credit Suisse, went the way of the hula hoop because they couldn't asset allocate. So the diaspora of great people from Credit Suisse are all over. I could go work with them, but Rich, it's so wonderful. Like Schwab, unlevered asset manager, gathering assets, good investment. The banking system, I just bring it up every time because I talk about the singularity. Man, it's running away from the Bitcoin thing. And when you are unsound, guess what happens? things go away. So I love that Rich and I bring those different perspectives to it. And where do we all end up, guys? Different backgrounds, similarities, but we're all here because of not just number go up, but because of the soundness of it, as you said, the predictability.
No doubt about it. And we're just, how do we facilitate to get the rest of this 90% of the world to kind of move in the right direction? It's just helping people. Service to one another, I think, is one of the greatest attributes, and doing it in smart and sound ways that meet the client where they're at. And that's what it's all about. So anyway, once again, check out Wyatt's website if you're interested in reading more, or his Twitter page, and give him a follow. He's a tremendous guy with a deep bench of knowledge, accumulated over thousands of hours. I'm certain of it. Just researching and learning. So Wyatt, thank you again for joining us. We would love to have you again at another point in time, just to come back and tell us what you're working on, and the success that you're having in moving the ball forward, to create more access points for other people to find Bitcoin. And so thank you for the good work you're doing, and really appreciate you guys coming on today and chopping it up. So we'll see you all later. Have a great week.
Thanks, Wyatt.
Thank
Take care, everybody. Thanks, Rich.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.